Well, welcome, ladies and gentlemen. This is Rob. Hope you're all having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please go ahead and type the number 1 in the chat box, I would greatly appreciate it. All right. Morning, Helen. Afternoon, John. Hey, Jeff. Morning. Sarah, how are you, dear? Thank you, Dory. Excellent. Excellent. Let's see. It's been a busy day. I've gotten text messages like crazy. Perfect. All right. Stopped out of NQ today. All right. So Tom said, good afternoon. Just exited my SPY trade for a 70% ROI. So that is excellent. Guys, let me know how your trades are going today. Drop them on in the chat box. Let me know. Good. I see there's a problem with YouTube. I saw Sean put something in there. It isn't us, it's Zoom. It's not something we're doing. It's Zoom's interface, not allowing it to go through. So we'll get it uploaded to YouTube, but for some reason, we're just not able to get it rocking live on YouTube today. All right, keep in mind, everything we do or look at is for educational purposes only. Nothing is meant to be advice or recommendations. As we go through the various candidates, keep that in mind. Now, we've got a lot happening this week. Monster Market Movers coming up on the 18th. Oh, we got Patterns in a Flash on the 17th, which is Wednesday and Thursday. Tuesday night is Mastermind Group. Next week, the 22nd, which is Monday, is Mastering the Trade for all of those that are in Power Option Plays. That you'll automatically be registered for that training. You got Power Hour each and every Monday. Trading Coaches Playbook on Friday. Brandon's last Crush Your Trading is coming up on the 15th. And then on the 20th, this Saturday, is Key to Be Free. Now, this training it's being done on a Saturday. I haven't done it in about a year, maybe a little bit longer, since we've done one of these. But I will tell you this. Those that attended the training and followed up on the steps that I laid out, I have seen marked differences in their trading, right? Tremendously. We're doing it on a Saturday purposely to try to give more people the opportunity to join in. I realize for some Saturday doesn't work. And no matter what I do, I'll never be able to get everybody satisfied with that, please, right, for what we're trying to accomplish. But you want to go ahead. Not sure who the admin is here today. I don't know if it's Amy. But if you could drop a link to Key to Be Free in, I would appreciate it. All right, and then you got Power Option Plays, Covered Call Explorer, E-mini Think Tank are all on their regular schedule for this upcoming week. Here's our follow us page. Make sure that you are following along with the various things that we do. It would definitely be appreciated. Oh, here's the Key to Be Free, right? Definitely loving what we're going to do there, guys. If you are sitting in a position that if you look back a year from today back and say, all right, how have I progressed over the course of the last year? And if you're not where you want to be, that's what Key to Be Free is all about. It's helping get you from where you are to where you want to be. I very specifically put this training together. This is about 90-minute long. Normally we do our free trainings are an hour. This is about 90 minutes long. Leave some room in there for some questions as well. But it is a live webinar. It's not recorded, but you definitely want to be there at that training. You want to make sure that you are registered for that. All right. And there's the link for it that Amelia dropped in. So thank you for that. I appreciate it. Oh, let's see. So we got a couple of trades in here that you guys have put in. As I said, Tom said 70% on SPY. John said SPWR, ICPT, naked puts, $800 plus cash flow spreads on KKR trades from Covered Call Explorer. There you go. Excellent. Excellent, John. Love hearing it. Love it. Robert said 30 cents on the spread with Tesla, 27 cents on SPY, 52 on the Qs. Stop that on Google for a small loss. 2 spreads still working out for $1,000 for the day. Come on, guys. How can $1,000 for the day on spread trades where, think about this, regardless of the spread, right? If it's credit, if you've got a regular vertical spread, if you've got a diagonal spread, calendar spread, doesn't matter. If you're taking in cash flow, right? If you sold, then if the position goes in your direction, you make money. If it goes sideways, you make money. And if it goes against you a little bit, you make money, right? I actually equated to 4 out of 5 ways of making money. So if you took a bull put spread as an example, if the stock stayed the same, you'd make money. If it went up a little bit, you'd make money. If it went up a lot, you'd make money. If it went down a little, you'd make money. And if it went down a lot, it would cost you money. See where I'm coming from with this? There's a lot of opportunity to pull in $1,000 for the day on a couple of spread trades. Come on, that's awesome. Absolutely awesome. Great job there, Robert. Great job. And of course, Brenda is crushing it on Qs. Beautiful. Okay, so let's take a look. Here's some of the trades. So Amelia, as you guys know, she's our head trader here for our students. And what she went ahead here and did is she bought to open single, just one call option, right? It was the 467 call for $1.52 was the order, right? She did 13 contracts and sold it 3 minutes later, almost to the second, 3 minutes later for $1.72. So if we look, if we took 20 cents times 100 shares, that's, I think I probably need a decimal point there. What do you think? 0.2 times 100. You got $20. Now that's if you did one contract. To do that, you needed $152 to make $20. Right, Amelia's got her rate of return here, 13% for 3 minutes. If she did 13 contracts, that's $260. Guys, that's not a bad 3 minutes worth of work to pull in $260. All right, it's actually phenomenal. Well, Rob, I don't do 13 contracts. I do 2, I do 5. It's too small an amount for me. Guys, this is an example of one trade. It's kind of a picking up change trade. You can do it over and over and over again. Every day, these types of trades present themselves. You're looking for pivots, you're looking for fibs, you're looking for key levels, excuse me, that Amelia identifies in her Trade Watch alerts of what she's looking for, where you pivots, all that. I mean, this is a great trade setup, right? Congratulations. Good job, Amelia, on this one. That's fantastic. So let me pull this one off here, the calculator. And then we've got a debit spread. Right, debit spread magic. So if we look down here, right, at 10:15, actually 9:36 where it started. So the top of 9:36, she had a debit of 30 cents. So basically, she had a $1 spread that she paid 30 cents to enter into the trade. So her maximum risk in this trade is what she spent is 30 cents. She's done, okay? But what happened on the trade? Amelia went ahead and is it 40 minutes? 46, 56, 06, 40 minutes. 40 minutes later, she rolled out of this trade and got a credit of 71 cents. So she paid 30, got back 71. She made 41 cents on her 30 cents that she put at risk in the trade. 136% in 40 minutes. And her maximum risk, if she just did one, is $30. Now, she did 3 contracts here. So she made 41 cents per contract, or $41 per contract. It's $123 is what she made in the 40 minutes. But Rob, you know, if I did a trade on Amazon, I could make a lot more money. You know what? You right for sure you can. Yes, you can. But are you going to place the trade on Amazon? Is it the same risk category as a debit spread? The answer is absolutely not. You're picking a directional trade. You're picking it on a volatile stock, a very high price stock, which could have some larger spreads, not the largest, but some larger spreads to contend with, higher cost. It is a Monday, which greatly increases cost, right? Here, Amelia needed 30 cents in order to do the trade, right? I like it a lot, a whole lot. So good job there, Amelia, on that. That is fantastic. All right, Jonathan said change in front of a freight train. Yeah, that's exactly it. Why does Amelia like the 3-minute chart? And congrats. It is her time frame. So guys, when you pick the trading time frame that you choose, number one, becomes very personal to you. You know, you take Brandon, for instance, where he may trade off a 15 or a 30-minute time period. He may trade off a 250-minute chart. It is his primary chart for that setup, the way he looks at his supply and demand zones, right? For me, my primary chart is a 5-minute. For most, it's going to be a 1, a 5, I'm sorry, a 1, a 3, a 5, or a 15 for most will be primary. Can you do a 30-minute primary chart? You can, but you're doing a little bit longer term if you're waiting for 30 or 60 minutes in your trade. For me, if I'm looking for right now very heavily on day trades, if I'm looking at day trades in there, then I want to have that shorter time frame. But I feel 1 is a little bit too short. You could use a 2-minute. I know some that use 2. I'm not a fan of 2 personally, but you can. It doesn't mean it doesn't work. It's just my preference. Remember, you know, I like chocolate. My wife will tell you, oh my God, it's the worst thing in the world unless it's dark and I can only have like a tiny little piece because she can't stand the sweetness of it, right? To me, sugar should be a food group, or at least chocolate rather should be a food group, right? So it's just a matter of preference, right? What it is you like. So PK, she used the 3 because it's a time frame that fits her risk profile, right? 5 is a little bit too long for her. 1 is a little bit too short, and or 2. 3 is where Amelia settled on for her personal time frame. Amelia said, easy to show the action. I trade off 5-minute charts. Okay, so she's using this as her example. All right, so Kevin said, it's not, Kevin, not a bad question at all. By all means, ask the question. You know, I tell, you say it's in workshops all the time. Oh, I didn't put my light on there. Sean will get angry if it's not bright in here. It'll dim down in a minute and adjust. So I would teach a workshop and say, you know, tell people all the time, there are no dumb questions, right? There are no dumb questions. And someone brought something up one day about loving their wife or something like that. And someone else in the room said, well, why would you do that? Why would you love her? And I'm like, all right, now that's kind of a dumb question. Okay, so there are almost no dumb questions. But when it comes to trading, if you don't understand it, then it's a question that needs to be answered. If I can do it here, I certainly will. So by all means, good. I mean, I'm glad the light helped. I don't understand spreads. I remember going to your classes years ago, and you always said you might not understand it now, but someday the light bulb will light up. It still hasn't lit up. What can I do to understand the spreads? Okay, so why don't we just take an example, and we'll use that as part of the training this morning, Kevin, and we'll go through and we'll look at a spread. We'll go find a candidate, and we'll pull one out, and we'll take a look. All right. Now I don't do debit. This is debit, not credit. I don't do debit spreads. Amelia does a ton of debit spreads. Right. This is her trade. All right. This is what she does, and she does extremely well. All right. All right. Better. All right. Good. So give me a few minutes. Kevin will come and circle back around, and we'll talk about the spreads there. All right, trading Black Friday. So here's the thing. Black Friday is no longer Black Friday, right? Black Friday is Black November, right? It's the whole month is Black Friday now, right? Black Friday sales, it comes up on the 8th, right? Or on the 5th or the 1st. I did get emails of, November 1st, Black Friday. Black Friday, right? The Friday after Thanksgiving, normally Black Friday. They did talk on CNBC this morning. A lot of retailers are going back to it this year and claim they will have their biggest deals in store only, which would be very interesting. Excuse me. It'd be very interesting to see how all of that pans out. I think traditionally, a lot of individuals have moved towards online, which is where I really want to talk about trading, about how Black Friday tends to work. Who are the companies that are affected the most by Black Friday? You've got retail establishments, right? Is the first thing people think of, right? The old Toys R Us or Babies R Us or a lot of us, right? Bed Bath and Beyond, Walmart, Target, Amazon, online retailers, right? And of course, if they have a presence, brick and mortar, right? Such as some of the clothing stores. I can't think of the name of it right now, but some of the kids' clothing stores. also having that presence there. Jewelry stores, the charms, right? I'm just at a loss of all this stuff. Just not thinking of any of them right now. But I think you understand where I'm going with this. The retailers are where most people tend to focus on for what's going on for Black Friday. But one of the areas that people tend to miss a lot is shipping, particularly because shipping has become such a major part of how we shop now, right? There are less people going into stores. There is more happening with deliveries. Heck, even Whole Foods delivers, right? Peapod, which is Stop and Shop's product. We used to have a supermarket here, a little local supermarket that was not far away, that would deliver, right? And now you've got some of the delivery services out there, the Dash, right? DoorDash and stuff like that. Uber Eats. We went out for breakfast yesterday morning. We sat in a bagel cafe. It's in Garden City where we are. And we sat in a bagel cafe, and there's an Uber Eats pickup window. And we waited about 15 minutes to get our food. And then we were there, whatever it was. I was there with my daughters and my wife. So we were there for maybe an hour or so after we got our food and just hanging out. And we must have seen a dozen Uber Eats drivers come in to pick up food, right? Go over to the Uber Eats pickup, grab the bag and go, right? People are focusing more on the delivery and less on the doing, less on the going. I use this phrase with my kids all the time. Stop doing $25 an hour work unless you want to make $25 an hour, right? And don't get me wrong, for my kids, you go back a few years ago, 25 bucks an hour was awesome. But my oldest one is a nurse making top dollar in New York, State. She's on Long Island, but in New York as a hospital nurse in one of the IC units. My younger one is a teacher, right? She does a little bit better than 25 bucks an hour, but go back a few years ago, $25 an hour was awesome. And if you're making $15 an hour, I get the idea behind 25. But point is, if you're cooking your food and that's taking away from you getting something else done, if you're cutting your lawn and that's taking away from getting something else done that could make you money better than the $25 an hour, would you be better served hiring people? And I think a lot of people right now have a lot of money in their pocket, a lot of cash on hand, much more than they did a year ago, and they're willing to spend it right now. I'm not willing to waste at all. That's not me. I'm not a fan of that. I buy what I need and live my life the way it needs to be lived. I don't spend just for the sake of. But with trading this, guys, I think the things you want to look at, for me, what I always look at this time of year is shippers. You've got FedEx and you've got UPS are the biggest ones for me to focus on, right? So if we go and look, ups, UPS, right? And they've had their ups and their downs, right? Without a doubt. So if you go back and look, let's see. Let's go back and look here. We're going to need one more step back, I think. So here we get into December of 2020, right? We've got this move coming down on shippers, right? On shipping on UPS, right? You got this move coming down, right? And we don't see a reaction until March, right? Is when the reaction comes in. If you look at FedEx, let's go back to December. Actually November, right? So we're looking at November here. So here, November 5th, 9th, 5th, 3rd. Okay. So we had a quick pop early on in November. We got a pullback, and then we got a nice little run take place on FedEx. I might have been looking in December and not in November for UPS. We'll go back and take a look. But that move from 256 up to 304, guys, that transpired around this time. And you're going to start hearing UPS and FedEx talk about, our shipping is up, or you're going to hear companies like Amazon. What happens if you're following an Amazon and you hear an Amazon story that says Amazon has shipped a record number of packages? Well, Amazon is not strictly Prime. We still get deliveries from UPS, and that becomes their overflow. This becomes the bigger time of year that they have to use that UPS or it could be regular postal service, but they even do things on a combination. where they ship for both. They ship it out UPS, and UPS passes it off to Postal Service to do the final delivery. They bring it to a shipping center, right? But looking at the shippers, let's go back and look at UPS again. Right? And let's go back and look. Let's go find the 1st of November. Right in here. So we go from, I don't know, 158 up to 172. So you see where I'm going with this, guys? There's a rise. There tends to be historically a rise in shippers. Now, the nice thing is you can come, if you're using Omega charts, you can come and here where it says UPS, right? You can click on that and it will show you other, oh, you got to stay on it though. It'll show you other shippers that are in the same, you know, like there's FedEx, right? That are in the same category of them. And you can see if there are others out there that you could focus on. I don't, right? I focus on UPS. I focus on FedEx. That's it. If you wanted to look at the sub sectors, right? You've got air freight, airlines, and so forth. And then this is just transportation, period, right? Transportation is a little bit too big because I don't think over-the-road truckers gets affected as much. Some, there's always a boost there, but over-the-road truckers is a different story today, period. It's not a Black Friday note. It is we don't have enough over-the-road truckers. There's not enough truckers, period, right now. With all of the containers sitting on our own, you know, shorelines that we can't even get into the interior because you can't get the stuff that's on land picked up, right? So look at some of the, you know, Black Friday. Look at some of the shippers. UPS, FedEx tend to take pops at this time. When we go back and look at a previous year, well, 19 might be a little bit tougher. Let's see. So here you had a quick pop from about 116 to 125, and then we got a drop off in there, right? But again, it is COVID, right? So that definitely has you know, a play in it. So here, if we come back, here's November 3rd. We've dropped from 116 down to 111, and then ran all the way up to about 125 the year before, right? In 2017. So you guys can see what I'm getting at here, all right? There's opportunities in shippers come this time of the year, all right? Beautiful. Okay, just make sure I didn't miss anything. I did not. All right, so Kevin, let's talk spreads a little bit, right? So if we're going to do a credit spread, and let's say that I'm going to use a company like, let's see, how is MU looking? Oh, you know what? I need to turn on my intraday data. Do that. Give it a second to settle up. Okay, so there's Micron. All right. Pulling in a little bit. Okay. So if I'm looking here at a credit spread and I'm looking at Micron, I'm going to look at something down below this 76.41. Actually, let me go over here where I've got some moving averages. All right, good. So I'm going to look at somewhere down below that 76.41 level as my ideal for an entry point. So 76.41 on Micron. All right. So let me bring us over to TradeStation. Let's look at Micron. I've got an option chain over here. I'm going to look for this week expiration, and I'll be looking for puts. I'm looking at a bull put spread, and I want to be down below 76.41, so I can look at selling the 76 and buying the 75. So you could do this as separate setups here, Kevin, right? So I could sell the 76 and buy the 75, or you could do it as a married position together. If we make it easy and just turn this into one contract for easy math, okay? Just one contract. So the natural says if we take and sell this at the bid and buy this at the ask, naturally, we're going to take a 31-cent credit in. If we try to negotiate the spread, you got a penny here, a penny here. There's really not much that you can get half of it. So maybe a penny, right? There's really not much you can get out of it. But that's what the mid is, taking into account the mid price between those two positions, okay? We, of course, want to do it as a limit order is the way we want to set it up. But we need to look at what the ramifications are here. So we're looking at, I always look at the sell to open first in my head. I'm selling to open the $76 put, and then I'm buying to open the $75 put. Yeah, it's my con, Robert. Yep. So if we're looking here, let's try that one more time. Too many clicks. So $76. I'm going to turn this into red. It's the position I sold, right? So I risk position. And then if I make this one 75, and I'll just turn it green just so we got some different colors in there, right? And you could put notes to them and so forth, right? To make it easier. But my risk, Kevin, in this trade is if we get below 76. That's my risk in this trade. Right now, to understand the math behind the trade, we have a $1 bid-ask spread. So the maximum, unless you really screw it up, the maximum you can get in trouble here is $1 of cost. That's it, $1. Right? If you were exercised, $1 is the maximum risk. But you're taking in a credit. You're taking 30 cents of credit in on this position right now. So realistically, if $1 is the max, my risk becomes 70 cents. So I'm taking 30 cents in. When we do cash in over cash out, cash in my pocket is 0.30 cents. Divided by cash out. Well, cash out, I need to have 70 cents on hand. If this option expires worthless, these options, that's a 42, almost 43% rate of return for a week on this trade. Now, do I limit myself? Yes, I limit myself. The most I can make is to credit 30 cents. If I buy a call option on this, what's my limit? There is none. It's infinite how high the stock can go. But remember, when I buy a call, the stock has to do what? It must go up if I'm long as a call. When I do a credit spread here, bull put spread, if the stock goes sideways, I make money. The stock goes up, I make money. If it goes down a little bit, I make money. If it goes down a lot, is where I get in trouble, right? So, Kevin, does that help to answer it a little bit? So Kevin said, or $100 per contract. Yes, Kevin, that would be my max risk. What would the commission and fees be? I'd imagine it would be impossible to make money after the commissions with one contract. So it definitely hits home a little bit, Jonathan, but TradeStation is what? 60 cents a contract. TOS, I think, is 50 cents a contract, right? Tastyworks does a combination, right? If you do a spread, if you do them as a married position, which we would be here if we place this trade, they have discounts. There's also no commission on the way out, right, to close the trade. So if you're looking at, heck, if you paid $1 per side, right, and you did all 4 contracts, you would have $4. $2 on the way in, $2 on the way out would be your overall commissions. My challenge is how to manage the exits. I get that, PK, and that's the biggest challenge everybody contends with is managing the exits. Okay, so here's the phrase, and you would have heard me say this 100 times in workshops before, right? If the position starts moving against you, right? If the position starts moving against you, then here's what you need to do. right? Determine where the next support level is. So let's say the stock made its move down. And my pencil, where to go? Oh, okay. Probably should use a color that's not white because it won't be visible. So let's say the stock moved down and it gets right down near my support level, near my fib line, my leg that I sold, right? At that point, you've got to make some decisions. Do I still want to be in this trade? One of the ways to manage around this is if the delta gets to 35, you exit out of the trade on the short leg, right? It's funny, we just went through some of this in the mastermind group last week on iron condors and 35 delta and so forth. But manage the trade. If the stock gets down to, the option gets to where it has a 35 delta on your short leg, buy back the option and your obligation, right? If you broke through this support, it's time to get out of your short leg, the one that you have a risk for, right? So that's the first step. If you're wrong and it goes against you, get out of your short position. The bigger question and the bigger risk potential if you don't do it right. So if you're brand new at this, wind out of the trade, get every penny you can, pay, you took 30 cents of credit in. By the time you wind out of this position, it might cost you 60 cents, right? Get out of the trade, call it a day, both legs. If you're more experienced, what I would say to you is determine where the next support level is. Well, support is all the way down here at 73 and 5/8, right? 73.63. Wow, I don't believe I just said that, 5/8. So 73.63, okay? So determine where the next support level is. Check, I did that. If you think the stock can get there by expiration, then you can hold on to your long leg. But let's say that this happens on, this is the day that we break through and we buy back, and 2 days later is where expiration is. Well, we probably don't have a lot of opportunity to make it to that next support level. So no, I would just close the entire position all at one time. Determine where the next support level is. If support is below the strike price you bought and you think the stock can get there, hold on to your long leg. That's the phraseology. If you don't think it can get there, then just wind out of your entire position. But the easier way for a newer trader, hear this loud, for a newer trader, newer meaning even to the strategy, not necessarily to trading, would be to wind out of the entire spread. Just exit the entire position. Dude, all right, a couple of comments came in here. Tom said, this expires in 4 days, lower risk from volatility significantly. Well, yep. Robert K, how much is a credit spread on TOS to place this trade? Okay, that's better. Robert S had said $13. That's why I'm like, nah, I don't think so. But he said, sorry, meant $1.30. Okay. Barry said $1.30. All right, so there's your cost. I think it was Jonathan that asked that question before. It's already off the screen, so I can't see it. But so cost, is there a cost to it? Yes. Are there fees like there used to be? There's not. There's not the $5 plus $1 per contract, right? We don't really see much of that anymore. Some, I guess, but not really much of that. Yeah, no worry, Robert. You're fine. You're good. Okay, good, Jonathan. Good. Glad. Let me just back up, make sure I got them all. All right, it was Jonathan. There we go. I see it now. Jonathan said, so many times I got out when it broke support resistance only to find it expired worthless. And you have to rate it, Jonathan, according to the trader's skill. If you said this is support and we broke support, forget the word credit spread. Forget the word buying an option, a call option, or forget selling a put, or forget anything else, and go back to the most basic, simple strategy. If you bought a stock and it broke that level, would you still be in the stock? And if the answer is yes, then now start projecting that forward into an option. But in so many cases, if it breaks support, you don't want to be in the trade any longer. To say, well, I've got a little bit of wiggle room in there, so I'll hold on, can become hazardous to one's financial health or financial well-being, right? And for some of you, your physical health when your spouse finds out. I have seen more than one occasion where a wife has beat a husband senseless at a live event, one of them here in New York, because of a trade that they did not tell her about. And then once they said it, which I don't get, at the event, it was not a pretty thing. PK said, I keep listening to Trading You on spreads to become more understanding of it, but the first idea that enters my head is the dog chasing its tail. Yeah, I love spreads. They're a huge part of what I do. Barry said $65 on TOS per contract, regardless of the type of contracts that they're bundling. Okay, good. Gene said you originally expected that MU trade to go up. What were your targets? There are no targets, Gene. So here, and this is where credit spreads become really cool, right? We're not looking at a target to say, okay, let me get out of this trade. My exits become very simple, very straightforward. My very first exit on this is to put the entire spread, and I took 30 cents of credit, put an order in right now, good till cancel, to exit this position at 5 cents. And if they're trading in pennies, you can even go lower than that. You just got to look at how they trade, right? You do not see, these are all single, you do not see anything, well, actually we got a 92, 94 here. So these are trading, that doesn't mean they'll let you put these in, excuse me, at pennies, but you can put it in for 2 cents, 3 cents. The rule is 5 cents. So if I can get out of this and give 5 cents of it back, the thought you've got to keep in your head is, yes, you'll pay a commission to close it out. And yes, you're going to give something back. But are you willing to hold on to it and not have bad news come out on your stock, on the market, on the world, right? The economy, whatever, and this stock go tumbling down and you realize maximum risk because you were trying to get to that last plug nickel, right? Is the way that I look at it. So I will always buy it back. So that's the way I exit out of the trade, right? So if my position gets to a nickel, meaning it's moved up on a bull put spread, and I can buy it back for 5 cents and my obligation, I'm done, right? And you may not even want to do the whole spread. You may just say, all right, if my short leg gets to a nickel, I'll just deal with it on the short leg. Beautiful. That's an easier transition, one less commission, and so forth, right? So that's my exit of it moving up or moving sideways or moving down a little bit. For it going down, if it breaks support, that's where you've got to make the determination, should I get out of the trade? All right, let's see. Yeah, Robert, thanks. Jonathan said, Rob, how do you guard against big gap ups or downs if the credit spread is a weekly? There is one surefire way to guarantee gaps will never, ever, ever mess with you. Ever. Don't trade. Other than that, you're going to have a gap. And there's nothing you can do about it. Nothing. Sometimes you feel like they're targeting you. Right now I'm on camera, right? You're seeing me. I feel like when I'm placing my trades, my camera's up there and I may not be using it, but the lens is there and the market makers have figured out a way to worm in and get into the back of my computer and they're watching me. And as soon as I hit enter, someone on the floor yells, he's in, and it goes the exact opposite way as it had the whole morning. As soon as I enter, it does that, right? There's nothing you can do about the gaps, Jonathan. It's just, you got to be in it to win it, right? It is the theorem, the motto, right? So you plan and exit rather than let it expire. I always exit out of the position, Gene. I don't carry over the weekend on short legs. Okay. Charles said, me too. Yep, absolutely. So let me open this up. See, here's the why that you got to be in it to win it. It's going to open up. See, okay, actually, it's page I wanted. All right. So S&P 500. Okay. This is today, right? The black candle is today. Look at Friday. The 8 moving average, close enough to our fib line, the 118, close enough there. And we push up on Friday off of that 8, right? Well, we had stocks, Google, look at the pattern on Friday. Wow. Netflix, look at the pattern. Look, guys, remember, how do you need to look at this chart? You need to look at it like this. This is Thursday. Look where the 8 moving average was on Thursday. Woo! That is so sweet. Right there at the fib line, right there. We move forward, bam, right? Explosive, and it played ping pong between the two fib lines. It closed at 682.61. We're at 682.45 is our resistance. That actually, I don't know if that's the exact level. Let's see. 682.59. 45 is just my fib that's on there. So, I mean, we crushed it, right? The expression is you got to be in it to win it. Did I know Friday was a crushing day? Heck no, not at all. But guys, look at this. Friday was the 12th, right? 390, 1170. So call that 1,500, 11,000, 15,000. So $36,000 on Friday. That was half of the week. $68,000 a week, half of it was Friday. You got to be in it to win it, right? So that went back to a question in there about the gaps, right? Which a long drawn out answer for it, Jonathan, right? Of you can't really stop them. Just like, think of this. You did a bull put spread, you bought a call. Doesn't matter. That gap down is going against you no matter what. Right now, bull put spread, you bought a call. Same trade, basically you're bullish, right? Well, stock gaps up. Which one do you want to have? Which would you rather have? I want the buying call. You don't know that, right? See, I don't eliminate the call and put buying at all. I'm a huge advocate of that, to do it daily, right, where possible. Credit spreads, covered calls, naked puts, iron condors, these cash flow strategies. Guys, you show up at Key to Be Free, and we're going to talk about cash flow strategies, right? You need to understand that there are things you should be doing. I'm not talking about your primary trade per se, but here, I'll give a great example. I would bet most of you know the story of the goose that laid the golden egg, right? And that, the question came up of, well, why don't we just kill the goose and get all the eggs at once instead of waiting for one egg every day, right? Well, the goose that laid the golden egg, think about that for a second, okay? That golden egg is what? Is an opportunity every single day, right? The market presents an opportunity every single day. But I want you to look at a credit spread as a different reason for taking the trade than you take a directional trade. So here's where I'm going with this. What if you said, I've got 30 grand cash right now, and I'm going to put a down payment on my car of $30,000. I have really tiny car payments at that point. The car is 50 grand. I'm going to pay 20 grand over 5 years. It's 1.9%, blah, 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 whatever it is. Well, you just killed the goose that laid the golden egg. You killed the goose because you gave away the 30 grand. That goose can lay a golden egg every day, every week off of that money. What if you took that money, the 30,000, did not do directional trades? Why not? Big home runs there, yes, but for a higher reward comes higher risk. What if we did instead of a directional trade, we did credit spreads? Think about this. If the stock goes up, I make money. Well, let's call it a bull put spread. If it goes sideways, I make money. If it goes down a little bit, I still make money, right? I get a lower rate of return, but if your car payment is $500 a month, how hard is it to make $500 a month on a credit spread? We just looked at a $1 spread. So you got 30 grand. You got 30 grand to do that trade. And we're looking at this trade right here is going to cost us $70. If we did 10 contracts instead of one, we would make $300. If we did 15 contracts, we would make $450. Still not quite enough. If we did 20 contracts, that would be $600. If you got a $500 a month car payment, you needed to put away, you need to use $2,000 of your $30,000 to generate enough to cover the car payment. And why are you not doing it? See where I'm going with this, guys? So credit spreads, are there risks? Yes. Are there risks in the directional trade? Yes. But no matter what you do, there's a risk. Cross the dang street, there's a risk, especially in New York, right? Especially in New York City. And I don't know if people wearing masks, it's causing brain damage because they're driving even crazier now, it seems. In other words, just grind it out. There you go, Charles. You must be prepared for the worst if you carry overnight. Yes, Jonathan, absolutely. In other words, just grind it out, right? Jonathan said, I always think about the gaps that could wipe out all of those $300 and $400 credits. But remember, right? Remember, Jonathan, on this trade, my maximum risk is $70. My max risk is $70. So how many, if you can make, let's make it easy. Let's say my profit is $50 and my maximum risk is $100. Okay. If you can win on 5 or 6 or 7 or 8, you see where I'm going with this? If you can get your win ratio to where it needs to be on this trade, and remember, you don't need it to just go sideways. You can't look at it as it's a 50-50 reward versus risk. It can go up or down. It doesn't work that way. Going up, going sideways, going down, I still can make money in all directions. It's just a matter of how good you are of being able to read the chart and react when something happens on that chart. But you're right, those little hits can wipe you out. Ofer said, I need a lot more understanding. I understand. I truly do. Guys, listen, if you, those of you, and I know everybody's not in there and that's okay, but those of you that are in TradingView, right? Go to TradingView, go into the foundational videos and look at the credit spreads down here. Now, this is the video. There's a manual that's associated with it as well, right? Same numbers, same everything, right? Go look at that, right? And the nice thing is we do 2 live trainings every month. I do one, Tony Benson does the other. Every month, we do a live training 2 nights a week. They're about an hour long. And the goal of that training is to answer questions. We come in and teach, something in there like, these are, if you look at technical analysis, these are some of the things we've done on technical analysis, right? Trade setups. So let's see. A lot of things on setups. Cash secured puts, diagonals, big moves, earnings, covered calls, the Fed, known news gaps. I remember that one well. Trading the opening gap, splits, Wheel of Fortune, moving averages, trade breakouts, and so forth, right? There's miscellaneous, there's mindset, essential skills. There's tons of stuff up here, right? But go in here and go into the foundational stuff and watch those credit spreads, right? Watch credit spreads. That will be the biggest component for you to help you understand them, all right? There you go, Kevin. There's a link for that. Amelia just dropped it in. Thank you, Amelia. I appreciate it. Perfect. Perfect, 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 perfect. All right. You're welcome. Okay. Guys, gals, drop in the stocks you want me to take a look at. We are moving quickly here today. Wasn't planning on talking about iron condors, but well, we didn't talk about iron condors now, did we? I wasn't talking about talking about credit spreads, but it definitely worked out. So Brenda asked for QQQ. Docus. Excuse me. It's a newsletter I used to have many years ago. Had 5,000 subscribers on that newsletter before I even knew what an education company was. All right. So we look at the Qs right now, Brenda. We are above the 8, so we're in a bullish bias, true bull. We're below that 395 on one level, a little bit concerning there. Get me back above, retest and bounce. 401 is our, well, actually 400. We need a line at 400. So let's put that in there. Oh, we got that. Good. All right. So we've got a blue zone between 400 and 401. Right in there. So that 400 would be our next target then, Brenda. IWM. Okay, which is the Russell 2000. Okay, so look where we are, Karen. We're right back at a support level. Now, let me do this. Karen, I'm going to take you out of here for a second. And let's go here. All right, so this is my happy dance time. I have iron condors on the rut that expire this week, that expire next week, that expire. So I've got on November 19th, November 30th, December 10th are the three most recent ones I have right now. Where are we? Well, let's do it this way, actually. So we're down today 11 points. I like it. It's good. I'm getting a little close to my risk on there. So if we go and look back here, and if we look at the rut first, right? So I like that black candle. I love this high here, and then we had another high and a lower low, and we had lower highs. It looks like now we're going to make a lower low. That lower low, Karen, would concern me the most. If I'm thinking bullish, it would concern me the most there. Now my bull put spread is where I'm getting in trouble here. We're pushing up against that bull put spread. I'm over 100 points away right now, but it's not something that's unachievable by the end of this week. We can move 100 points, get me back up to that 2480 level ish where we were, and we're right in that ballpark again, right? 60 level rather, I guess, but well, it was only 60. So we're not, but we could move that 100 points. So with that being said, watch the rut, Karen, for the IWM, right? You can watch the IWM one here. I just like rut. I like to go back to that source if possible. I'm trading SPY. I look at the S&P 500. I still focus on SPY, but I want to see the nuances in the index, which is where the ETF is coming from. All right. So if we break here, Karen, we break that low right there on IWM. It was M you had, right? Because there's also IWN. We break that low in there. I'd be a little cautious at that point. Look for the 21 moving averages on the next downside. On the upside, if we do move up, 247 would be our target, but we got to get past 244.5, that recent swing high we had in there. Actually, we should identify that or highlight that, I should say. Point that out. Yeah, okay. Beautiful. Hope it helps, Karen. PK is asking for Apple. That doesn't look like Apple. Okay. All right. So, okay. Same scenario, PK. Where are we at? The 8 is sitting right near the fib line. See, there's a lot of stuff setting up right now. The question is going to be, how do we move forward? How do we move from here? Is the meeting of Biden tonight with China, is that going to have any bearing? They don't expect any results to come out of this, but is that going to bring or bear fruit, or something going to be said? Is one leader going to tick off the other leader and cause all kinds of problems? I think we're at a very interesting position right now in the market, right? And historically, the Fed, all of that stuff coming up right now. We've got lower highs in here if you count today's high, right? If that's what we make it up to. But if we close here and get the bounce and everything's looking bullish, 153.5 would be my next resistance on Apple. And that was PK and Paula had Apple in there. Yeah, well, you got the signing of the infrastructure bill, which is a feather in Biden's cap. For that bill, you know, I am mostly agree with what's in there. The bigger things, you got a lot of blows taking place right now, right? With Republicans, Democrats losing some of the governor's seats take place, like Virginia, that haven't had a Republican in what, 30 plus years as governor. You take the federal government, Supreme Court, or whatever court it was, I think Supreme. Yeah, because it was Supreme that gave it the ruling of the federal government cannot mandate that companies with 100 plus people must require vaccinations for people to work there. The Supreme Court said that is not a federal decision. It is not in the Constitution. So they cannot, that does not stand up. So it doesn't mean companies can't do it. Doesn't mean there aren't things that states can mandate, but not from a federal level. So there's a lot of blows coming. Yeah, red wave on Long Island, Alan. Exactly. I mean, there's some changes taking place, but there's always that, guys. When one president wins, they usually turn. You know, the House turns over. It usually happens. We're going to see the House turn. I'm not doubtful at all. More hopeful than anything else, only because I'm not a Pelosi fan. Right? You can't get your hair cut, but I can because I'm a politician. And she was angry that they videotaped it. All right, so Apple, watch the lower highs, get the bounce, 153.65 is resistance. Let's see, Sean's telling me someone's asking for Adobe. All right, Adobe, same thing on Adobe. We're sitting right at that 657.73. We have a fib line right down below there. So if we can get that move up, 668 is our resistance. Notice today we pushed down almost to the moving average with the wick, almost perfectly to that level before we took our bounce, right? So there's Adobe, Apple. Alan's asking for Tesla. Yeah, I didn't get a chance to look at Tesla yet today, right? Because they were on my list. For those of you that, and I need to get this on my, I need to get this on our calendar documents, right? But every morning right now, we are doing a YouTube show live at 9 a.m., 20 minutes long. We're probably going to shift over to 8:30 and do a 30-minute show instead. We're just not there yet. But Tesla was one of the stocks on my list this morning, all based on his sale of stock, where they were down another couple of percentage points. And if you look at that 10-16-33 level, who's asking Tesla there? Alan, if you look at that 10-16-33, I'm going to have to write it down because I won't remember. 10-16-33. Over here. Let's make that line 10-16-33. All right. In an ideal world, I am looking for, come on, not what I want. I am looking for that gap down. I'm looking for a retest of that level and a fail. So that's 10-16-33. We pushed up as high as 10-14-52, kind of pushes the envelope a little bit. The news was really bad. I did not take the trade. You would look for pivots and stuff like that, but what a great opportunity today with that bad news that came out on Tesla. So with all that being said, we're in a neutral bias right now on Tesla, Alan. So give me the push back up to the 1000 level or that 1016 level and the fail, and there's an opportunity down to 946 on Tesla. Jonathan's asking for LVS. Las Vegas Sands, I keep talking about recovery stocks. We're just not seeing nothing recover the way it should be. Get rid of this. Okay. So big move to the downside. We're going to come off of this. I need a Fibit in here. All right. So Jonathan, LVS, we're in a bullish bias when we're not true bull. Moving averages are nowhere near in the right order. The 55 is still on top. It means I'm only allowed to take a day trade. All I can do on this is day trade. Come back above the 41.23, bounce, and retest bounce. We're looking at that 43.72 level as resistance on LVS. PK said, I had a vet professor say, what did it matter? What, she was the only one there, and I'm shaking my head with the statement from an edge. Yeah, it's interesting. It had nothing to do with whether she was okay, the person was vaccinated or immune or anything else. It was, you can do this, but you're telling the rest of the world they can't, is what it came down to. So, but you see that a lot with the government, right? We need to raise your taxes. Well, maybe the government should pay taxes. Maybe the politicians should pay taxes instead of getting away with what they do. Maybe we should cut their paychecks and so forth, and tax them on stocks that they own that have a capital gains that they've appreciated but haven't received the capital gain yet. Tax them on it and see how fast those rules change. All right. Zoom out on LVS again, sure. So there's the fib on LVS. All right, folks, at this point, I think we're done. I'm going to leave the room open a couple of minutes. Amelia dropped a couple of links in there, right? Trading You, and of course, the class coming up for Key to Be Free, which is this Saturday, the 20th at noon Eastern. So be there, be square. All right, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. Take care, folks. I will see you all on our next update. Bye for now.